client said, she said, man, I've been marking support and resistance. Now my chart got all type of lines and shit. Ain't nothing wrong with that, long as you know what you're doing. Cause look, these are levels, right? I got key levels marked. I'm paying attention to these levels because these are areas where the buyers and sellers had a battle. Blake said in the video yesterday was fast with that pump and dump. Yeah, they was because of that keynote. Now we're gonna break down why each one of these that y'all looking at, why they move. So we got in the video, they pretty much in the mindset of saying like, oh, we gonna make $1 trillion. The video said we going to make $1 trillion. It's the biggest name in the room right now in the video. Ticker symbol NVDA. Okay. Now they CEO, that boy Jensen Hang. Where he at? I like pulling up this picture of Jensen every time I talk about him. Dude. Buddy, move this out of the way again. He had the keynote the other day. Well, I think it was yesterday, yeah. He talked and he said a lot of stuff, but basically, you know, he stood up in front of the investors and said, we going to do over $1 trillion in revenue. Not millions, not billions. I'm talking about trillions. Trillions. So you wanna trim something that's making trillions? Nah, bro, hold on to it. You know, somebody that ain't financial advice. That's common sense, right? So revenue, for those that don't know, what is revenue? And some of us think we know what a fucking trillion is. Revenue is simply the total amount of money that a company brings in from selling its products or services. And that's before any expenses. That's before they pay for the shit that it costs for them to make money, right? So think of it like a lemonade stand. Keep it simple. Think of it like a lemonade stand. If you sell 100 cups at $1 each, your revenue is what? You sell 100 cups of lemonade at $1 each. What's your revenue? All right, hot boy. So your revenue is 100. $1 trillion is a million. If you made $1 every single second, it would take you over 31,000 years to make $1 trillion. Nvidia is saying that they're gonna hit that in just a few years. Now, this is what makes this even more interesting. The CEO said that this isn't even counting all their products. Don, this ain't even counting all their products. Bro, oh my goodness. He said computing demand has grown, okay, and I quote, 1 million times in the past 2 years. That's that AI boom talking again, ladies and gentlemen. That's that AI boom shit again. It's on, yeah, technology. Somebody says, so we looking at most splits. Right, Blake, right. Because Lord knows they let it get up so high, then the split is right around the corner. Iron. So why doesn't the stock move? It's under a 24 PE ratio for 40 to 70% growth. He's like, iron. So why doesn't the stock move? All right, so this is how many splits? Can somebody tell me how many splits in the video had already so far? How many times have they already had a stock split? That means they went up to $1,000 and then they went all the way back down to 100. Somebody says 2 to 3. Okay. Shadow, I think a lot of this shit is already priced in. I know you like there's no fucking way we pricing it all in, but I really do. I think we already know Nvidia is $1 trillion company, right? I don't know. You asking me? I feel like yeah, I think that it's priced in. I think that's the reason why, and it is moving. Let's just take a look in the video real quick. I'm gonna go right back on topic. Let's just think, and it is moving. Think about it this way. Let's look at the big picture. Let's look at the big picture. In 2022, and we got to think about all the splits too. Don't look at this chart and not take the splits into account. I don't know if I can show the splits. Yeah, you're showing the splits. It's going to show up as a S. So I'll be able to see exactly when there was a split. Maybe I got to go to a smaller time frame. NVIDIA is growing, bro. It's consolidating now. And it's been consolidating for if the shit stay in this level for about a year, but stocks can do that sometimes. It's no guarantee. But hey, hey, hey. I do think it'll pump. It'll pump. That's just my opinion. And also we trading along this line. What's this? Triple moving average crossover. What's this? Prices crossing moving average and momentum. If you look over here, it tells you that on the 13th, we had a lot of momentum. On the 12th, price crossed the 50-day moving average. They set a mark and pricing it in, and either it misses, hits, or exceeds mark, and market acts accordingly. Yeah, said Blake. Just don't think that it's not moving, okay? Don't think that NVIDIA is not moving. That's not the case. There's a lot of... I want to see all that. I might want to see all that. All right. Is VWAP above or below 9 EMA and 20? It depends on what time frame you on, Blake. But look, why does NVIDIA matter for AI? It ain't about why it's not moving. Because remember, this is an AI boom, and people was thinking it was in a bubble. You got to put it this way too. Think about how many people invested in NVIDIA already and haven't seen a return on investment yet. They invested money into NVIDIA that they don't even got. They couldn't even afford to invest in it, and they still invested in it. So they haven't seen an ROI yet. You said no matter what, it can't break 200. Nah, this is bigger than this is bigger than, I want to say anything and everything, Shadow. You can't calculate this like you've calculated anything else before. If I had to compare it to something, it would be like the .com bubble. Like when the internet first came out, if I really had to compare it to something. You know how every car need an engine? You know how every car need an engine, right? Well, AI, all right, Chat GPT, image generators, all of it, all that shit. It needs something called a GPU chip in order for it to run, right? Now watch this. NVIDIA makes the best ones in the fucking world. You understand me? Right now. It's like NVIDIA owns the only factory that make engines during a global car boom. Do you understand what I'm saying, Shadow? Don't be mad. Let me tell you something else, Shadow, too. And just change the way you looking at this shit real quick. If NVIDIA went all the way back to $1,000 today, you gonna wish it stayed at 200 for a little bit longer, for at 184 for a little bit longer, for you to be able to strengthen your position. Don't get mad that the shit ain't went up yet. Take advantage. Hold on real quick. Hold on, y'all. Pardon me. Pardon me, I've been acting a little pro. Pardon me, I've been still acting pro. been sitting on the seat in the flow. Name a strip club, I throw it. I don't see my I had notes that I was gonna talk to y'all about, but I can't find them. This is unprepared, but I told y'all I didn't feel good. Hold on. All right, it's all good. Fuck it. We freestyling this shit tonight. Fuck it. We freestyling tonight. We gotta get the live up to 100 viewers. I ain't even tripping, Shadow. I wish it, I wish everybody understood like a few of y'all do. That's the only reason I ever ask y'all to tap the screen or share the live is to get more people in here. You feel me? But if not, it's all good. Quality over quantity. But yeah, every technology company on earth right now is lining up to buy chips from NVIDIA. So the stock initially jumped 4.8% on that news alone, just on him talking shit about that. He was popping his shit up there. He even, at one point in time, flexed his arms. I'm talking about the CEO of NVIDIA. Flexed his arms under a world wrestling champion belt, under a fucking wrestling belt that said he was basically the king of AI. Think I'm bullshit? Hey, listen, I'm freestyling, so excuse my French, but I'm not reading from my notes, right? I don't got no notes tonight. But anyways, the stock jumped. It jumped on just them talking about it. So by the end of the day, it actually closed. It was down 0.7%. Why? NVIDIA jumped. Let's see. We was live when it happened. We was live when it happened. Hold on. It was here recently. We was live. I think a few of y'all was in here. We was watching the keynote, and during the live stream, the shit went all the way up to 188 and then dropped back down immediately. Yep. Right here. This was when he was speaking. This big ass candle, this big 5-minute candlestick went up in a matter of 10 minutes, $5 in 10 minutes. And then immediately started selling off. So let's go talk about it. Excuse me. This is a classic pattern. This happens with NVIDIA for those who know. We've been trading NVIDIA for a minute, and we know that sometimes they can have good earnings and still do bad. Like, and when I say do bad, I just mean the price still drop, even though they had good earnings. So this is normal for them. When the news breaks, you got early buyers who already positioned for this shit. They was already in it. They was already positioned for them to lock in profits. Do you understand what I'm saying? So when the stock pop, they sell. They immediately sell it. And then what happened is it fades. So that initial 4.8% spike that we seen right here, the 5% spike, and then it pretty much closed below where it even opened at. That's some sell the news shit that I was telling y'all about. Buy the rumor, sell the news. That's just institutional money grab opportunity, correct? Don't mean that the stock ain't worth what it's worth. Shadow said, I don't understand how everything is priced in at 180. The news has only gotten better. You gonna get it, Shadow. It's been 180 for 3 different earnings in a few different let's say conferences. So look, a CEO talking about $1 trillion don't mean that the stock automatically gonna go up forever, right? The market already had some of that priced in. We already knew, Shadow. We already had some of that. We're going to come back to the priced in later on. I'm going to explain that to y'all because it's gold to understand that. Cadence said, they about to shoot up crazy. That's why everybody's selling right now, says Cadence. All right, now I'm going to talk about Qualcomm. I'm going to come back to the priced in a minute. Yeah. Tomorrow, Jerome talks about rates. That's right. Jerome Powell, the devil's good with the numbers and the devil's doing the math, says Blake. How many of y'all know about Qualcomm? Excuse me, ticker symbol Q. QCOM. Pardon my little cough, y'all. I got a chest cold I'm getting over. But yeah, we got Qualcomm. This is a different kind of story than the video. All right, Qualcomm just did two things that we love as shareholders. Everybody that's holding QCOM, we love the fact that they raised their dividends. For those who know, they raised their dividends. That means they was paying us just for owning the stock, and they just start paying us more. Now they announced a $20 billion stock buyback. Do y'all know what a buyback is? First of all, if y'all still confused about a dividend or a buyback, let me know before I continue. I don't wanna talk about some shit you don't know. Okay, Cadence. Good question. So put it this way. First, I'm gonna start with the dividend. A dividend is like a thank you check, right? That company send us investors money just for owning the stock. You don't have to sell shit. You just hold the stock periodically and they pay you. Qualcomm just raised theirs from 89 cents to 92 cents per quarter. All right, now that's per share that you own. Now, if you held 1,000 shares, that's an extra $30 per quarter just for owning the stock. Now you multiply that over a year and it adds up. Now, what is a stock buyback? Imagine, all right, who asked me that? Cadence. Cadence, imagine that you got 10 slices of pizza, okay? And you own one slice of that pizza. So you own 10% of the pizza, right? Now, the company buy back 2 slices and destroy them motherfuckers. So now there are only 8 slices total. Okay, so your slice didn't change, but now it represents 12% of the whole pizza. That's a buyback. The company buys its own stock that make the stocks that we already got worth more than what it is. It's one of the most powerful ways that a company can pretty much reward us as shareholders. It's a beautiful thing to experience as an investor to have a stock and then they do a buyback or they raise dividends. You love it. It's like a raise, like a pay raise. All right. How many of y'all own dividend stocks? When do we know they do a buyback? Oh, they announce it, Cadence. Yeah, they announce it. So, all right, you got to be a shareholder. You feel me? Qualcomm was almost NVIDIA back in 2000, said Shadow. Qualcomm already had a $15 billion buyback running. They adding another $20 billion on top of it. So for a company that's worth about 140 billion, give or take a couple billion, now that's a massive commitment for them to be giving us money back, returning value to the shareholders. Is this only with stocks or with SYFA and other funds? What's FYFA? School me. School me on SYFA, Cadence. Did you see serve earnings? Great earnings. Raised guidance, new partnerships. Everything on track, holding long term. Shadow, who told you about SERV? The buyback I'm referring to. I'm not sure who they are, but I mean a lot of companies do buybacks. Yeah, a lot of companies do. It's not with futures. You don't see it with forex. You don't see it with crypto. Do they do it with crypto? They do something else with crypto that allows them to get rid of certain amounts of them. Is it called halving? The halving? All my crypto people, y'all know what I'm talking about. What do they call it when they get rid of crypto shares to make them more valuable? So that let's say they got 1,000,000 pieces of it, they'll fuck around and get rid of a certain amount so that it'll be more valuable, the pieces that you have. That's all it is. Blake says bum rate. Yeah, when a company raises dividends and they launch a huge ass buyback at the same damn time, it's management telling the market, hey, look, we got a lot of money coming in. We balling. And we pretty much know we finna keep balling. And we believe our stock is undervalued. Y'all don't know what the fuck we got. Y'all don't know what we got going on. So this is them pretty much popping their shit. It's a confidence signal. And if you've been investing for a while, you read them, you read where they put their money at. You watching this shit. You watching the capital allocation moves. I want to see where they allocating their money, right? You paying attention to this type of shit to see how healthy the company is and who managing it. Not just we don't just care about the dollar amount of the stock. All right. The dividend yield on QCOM Qualcomm is now about 2.84%. That is a meaningful passive income, especially in a volatile market environment. Okay, so do your research on dividends. Now, let's zoom out for a second. Let's zoom out. Where we at? Let me add a heat map. All right. Yeah, so yeah, because this shit don't exist in a vacuum. All right, the stock market, it reacts to everything that's happening in the world. So let's kind of zoom out. Somebody says also pay attention to dividend stocks that expire and cease to exist. All right, so the U.S. is easing sanctions on Venezuela. They trying to bring the oil prices down. Sanctions. What the fuck is that? That's how can I explain this? Let's call it a timeout. Let's look at it like it's a timeout for a country. Sanction. So the U.S. say you can't trade with us or anyone we friendly with. Venezuela got massive oil reserves. All right, they got a lot of oil, but sanctions have kept that oil locked away. Now with oil prices rising because of this Iran shit that's going on, the U.S. is pretty much unlocking Venezuela's oil tap to increase the global supply. More supply typically means lower prices. Lower oil prices helps consumers, but it can hurt energy stocks. So we're going to pay attention to that too moving forward. And we got Europe reopening the approval process. A tariff, let's talk about that real quick. A tariff is basically a tax on imported goods. If the U.S. puts a 30% tariff on European cars like they've been talking about doing, that's going to make those cars more expensive in America. That's going to hurt the European car maker. They making trade agreements, and those are basically deals, ladies and gentlemen, between countries where they say we're going to lower our taxes on each other's shit. All right, this is the Europe and the United States agreement. They capped it at, I think, 15%. So that's good for companies that sell products across the water. They ain't going to have that much problem when it comes to trading, and the market's going to be happy. Iron, is that like a penny stock shadow? Right. Oh, I love seeing smart people in the comments. Y'all already know what sanction is. Cool. So I'm gonna move forward then. Let's talk about for my real estate investors out there. If you own real estate or you looking to be a real estate investor, or maybe you just own some REITs, this information is good for you. So pending home sales are essentially contracts signed to buy a home. It's a forward-looking indicator. An indicator is like a sign or a signal. So when we look at the home sales that are pending, okay, these contracts that people sign to buy a home, that let us know what's going to happen in the future. Yeah. So more people signing contracts equals more economic activity coming. Homes, people pretty much got to buy furniture when they buy a home. They got to buy appliances, renovations, you got mortgages, all this shit ripple through the entire economy. Yeah, and economists expected a less than a 1% drop. Instead, it rose 1.8%, and that's what traders call a beat. Okay, it beat expectations. Y'all expected it to drop. It actually rose. Okay, it beat expectations, and the market rewards beats. Yeah, Shadow. Yes, I do. Now, all three of those stories I just told y'all about point towards one thing: controlled risk management. We got lower oil prices to help cool inflation. We have a trade deal that's going to reduce the static in the air, any animosity, any economic friction, right? And then we got the housing recovery, which is signaling consumer strength. And also the Fed's meeting tomorrow, like JB said. We get to hear what the Fed say. That's the wild card right there, because the market is holding its breath. It's holding its breath, and Shadow can't take it no fucking longer. Shadow about to lose. Shadow can't take it. The market is holding its breath. So yeah, a lot of indices moved very modest today, or yesterday, rather than them being explosive. Dream Chaser said they not going to drop rates, bro. Don asked me what are my thoughts on the Feds. I just can tell you what I want them to do. I want them to drop the rates, of course. Don, I want them to drop the rates. Since we on that topic, though, I pretty much have to talk about this because it's the elephant in the room. Let me get my water. Jobs still weak. We all do, but that's unlikely. It's war. All right, so tomorrow or today, since it's Wednesday, March 18th, the Federal Reserve announces its interest rate decision. The market is not making big moves right now because everyone is pretty much waiting to see what happens. You understand? Who is that? Who I'm talking to? My boy, where he at? Shadow. We waiting on the Feds. We waiting to see what the Feds say. So the Federal Reserve, who is tired of hearing the Federal Reserve or the Feds and you don't know what the fuck they talking about, right? And I ain't talking about the people that's gonna be watching when you fresh as fuck. I'm gonna be fresh as hell when the Feds watching. Drop topping, head bopping. No, I ain't talking about them. Look, the Federal Reserve or the Feds, it is like a control room for the U.S. economy. They control interest rates. What is interest rates? Somebody tell me in the chat, what is an interest rate? Interest rates is essentially the price of borrowing money. You got to borrow money, right? How much do it cost for you to borrow that money? That's what an interest rate is. When the rates are low, it's cheap to borrow money. People buy more homes, companies expand, the economy get to speed up. But when them rates is high, it's expensive to borrow. And a lot of shit slow down. Inflation cools. The Fed is constantly turning that dial up and down. Tomorrow they're going to tell us what the dial sit at. Okay? So the market right now is widely expecting the Feds to keep rates the same. Y'all see people in the comment section saying, they not finna change shit. They not finna change shit. That means no surprises are expected. But the market's still going to react to what the Fed says about the future. It don't matter. Whatever they say is still going to affect the market. So if they even hint towards a cut coming, the market could jump. If they sound hawkish, meaning they worried about inflation, the market could pull back. So you got hawkish and dovish. Okay? Hawkish if they think that If they worried about inflation, they hawkish. If they not, they dovish, right? Now, we we know that whenever the Feds talk, it's gonna be a lot of volatility because we've been trading for a while. So if y'all haven't been trading for a while, let you know. That's what's gonna happen. It's gonna be a lot of volatility Wednesday today because of this speech. Volatility just means a lot of movement. All right, how wild this price can move. Now, many reduce position size, meaning they don't put as much as they normally do on that trade, or they get some off the top because the announcement and re-enter after the dust settling will be smarter. Right? I want to make sure I hear the announcement, and then I'm gonna get in after everything already over with. Cause that little first 30-minute reaction after the announcement is usually a fake out. We done been faked out. Like don't let that shit fool you. All right. So the real directional move usually happens about an hour, maybe 60 to 90 minutes after, once the press conference is over and the algorithms then had time to digest the language. Pay attention. Even if you don't trade today, just watch it. Just watch it. All right. The market is a time machine, y'all. Do the same shit. So we got to understand why these stocks move before good news even happens. Right? Now, I did promise y'all a lesson that was going to change the way y'all see the market, right? This is one of them. The stock market does not react to what is happening. It reacts to what people expect will happen. That is an important concept for all of y'all to understand, understand, because it's going to trip you up, even if you experienced. This trips up experienced traders and investors all the time. We saw it yesterday with NVIDIA. Dude said that they was going to hit $1 trillion in revenue, which sound like the most bullish news ever, right? So why the fuck did they drop damn near 1% after going up, right? Out the gate, they went up. Powell's speech tomorrow. Ain't cutting rates for high inflation because of oil situation. Says Dino. What's up, Filthy McNasty? I hope all is well. So, imagine y'all find out that y'all favorite sports team is about to sign the best player in the league, right? Before the announcement, the team merchandise sells out, the ticket prices go up, everybody getting happy and shit. Everybody already making bets on it and all that. They like, yeah, we going to the championship this year. You want to bet? Right? They locking it in. Then the announcement comes and the prices don't go up much more because the good news was already priced in. The crowd already moved. That's exactly how the stocks work. Do y'all understand what I'm saying? So when we heard rumors that NVIDIA might hit $1 trillion, a lot of people bought the stock. The price already went up in anticipation. So when he confirmed it, there was no one left to buy. The people who bought early started selling so that they could lock in the profits. That's called buying the rumor, selling the news. You want to buy the rumor, sell the news. This is why you cannot just watch the news. You can't just watch the news or see a positive headline, assume the stock gonna go up. The market already knew. The question is, you always have to ask, right? Is this new information or was this expected? Did we already expect this shit or is this new information? All right, so this is why stocks sometimes drop even after reporting better than expected earnings. If a company was expected to earn $2 per share and they earned $2.05, that's technically a beat. But if the market had already priced in $2.10, that beat is actually a disappointment relative to what they expected. This is called priced for perfection. And it's where we live at as an investor. That's where you want to be. But then it went up yesterday when open says 75 Corvette. But hear me out. Before y'all buy any stock based on news, ask yourself this, right? Did most people already know this was coming? Is this already in the price? If yes, you might be the last one buying at the top. If the news is genuinely surprising, right? That's when prices move big in real time. That is why studying the market is just about, you know, taking your time. It ain't just about reading headlines. Okay, you have to overstand expectations. What does the crowd already believe? What would change that belief? Once you can read that, you're not reacting to the market no more. You anticipating it. Any questions? MU in the video tomorrow. Yeah, we was looking at MU, Qualcomm. MU is gonna tell us everything we need to know about technology going forward. Filthy. We need to see how they we need to see what's gonna pop off with them. We need to see how they do. We got to see how they do. See this big ass gap? This is what I mean by priced in information. You see some shit happening today with MU, but it's already priced in. So don't act surprised if don't nothing pop off. Now they gotta be some deep, it gotta be some good information for us to go move higher than this. But it's already priced in. It's gapped up twice. Let's talk about this real quick. I got something. Here we go. Here we go. Let me explain this real quick, y'all. What is gapping up? What is it? Why does it happen? Extreme buying pressure. Pushed the stock up so much it skipped candlesticks, it skipped prices. You can't even see it on the price because it pretty much shot up from 423 to 445. Up 10 points after hours. What the fuck? Yeah, man. That's the shit I'm talking about. It's already priced in. That's the shit I'm talking about. So when the shit hit the fan, what y'all think it's gonna do? I'm not telling you that because I want you to jump the gun. We don't jump the gun. We react. We go with the flow. We not, the trend is your friend, right? Y'all know that. Y'all know the trend is your friend. But what are we actually looking at, right? What are y'all looking at right now? Let me make sure y'all can see my chart. This chart pattern that you about to learn is one of the most important and one of the most misunderstood patterns in the market. Okay, it has many names, but we gonna call it tonight liquidity sweep. We're gonna call it stop hunt or a bear trap or a liquidity grab. Put a W in the chat if you're ready for that lesson. Hit the follow button if y'all new here. If you haven't already, hit that follow button. If you're new here, you don't want to miss another live stream. I got you, Filthy. All y'all new people, hit that follow button. Hit that follow button. I'm about to teach y'all about liquidity sweeps. I know y'all tired of being confused about liquidity. Sweeping your ass under the rug. Let's talk about it. I'm waiting on a few more people to hit the follow button. They just sitting here like a fly on the wall, y'all. Hit that follow button. I'm talking about your ass. You look at that. You see how that plus sign still on your screen? That's because you ain't hit the follower button yet. All right. I'm looking to get the 10K followers before this summertime. So when I get on here giving, teaching for free, that's the price of admission right there. You just got to pay attention and spend some time with me. Hit the follow button. Follow this one. He's great. Thank you, Don. Matter of fact, don't follow me. Get the fuck out of my live stream. I'm just playing. I'm just playing, y'all. I'm just playing. Sell off, then rebound at 2 p.m. to 3 p.m., says Jay White, 783. All right, so yeah, let's talk about this liquidity sweep real quick. So, how many of y'all play poker? Isabel says she did good today. How many of y'all play poker? I know poker is probably a bad example because everybody don't play poker. It's all right, though. So, look, imagine a poker table. Most players show their cards without realizing that they showing their cards, okay? They always fold when somebody raises. The big player at the table know this. So they just raise just to make everybody fold and they steal the pot. That's exactly what the market do to stop losses. It's going to hunt where most people are hiding. It's going to trigger your stop. and then it's gonna rock it the other way. How many people ever set a stop loss and then they get stopped out, meaning that the price hits their stop loss, and then the price go exactly where they wanted it to go? I'll give you an example real quick. Let's say you got in this trade, you got in right here thinking that it was gonna go up, and the price came down, hit your stop loss, and just to go exactly where you expected it to go. Okay, that's what it looked like. You'll get stopped out, but when the price comes into the red area, it kicks you out the trade just in case, so you don't lose more money, right? Nah, stop. Nah, Corvette. That's not the case at all. We are not saying that at all. Actually, Corvette, that's the opposite of what I teach over here at Ironworth Trading. I would never fix my lips to tell somebody never use a stop loss. How about you give them your money and then tell them never use them? You feel me? Hell no, y'all better not listen to 75 Corvette. Protect the bag. You never use them because you driving 75 Corvettes and shit, right? So you good. Strategy buns, I got a 10% win rate back testing. That's what's up. Now, in this masterclass, we gonna walk through. Isabel, what's up? You did good today. Congratulations. Learn from you. Stop loss is the most important. It is filthy. And guess what? We can never make them too tight. A stop loss, I mean, make that motherfucker tight as hell. Be very tight on your money. Protect the bag. Protect it. I personally don't like taking anything more than a 1% loss. And a 1% loss could be $100. So sometimes it might be 0.5% loss. And guess what? You could reposition. If it don't go the right way immediately, I think you had a bad position. Yeah, I think you could have had a better position if it don't go the right way right away. All right, so in this class, we about to pretty much I'm gonna walk y'all through the exact 4-step sequence that y'all looking at. After that, you gonna never look at a breakdown the same way again. Okay, so like I said, if you're new here, hit the follow button, because what looks like a breakdown is often the setup for the biggest move up. Okay. Now, what is a stop loss? What is a stop loss? Let's say we got in here. Cool. That was a good. That's good. Oh, I'm tripping. Y'all can't see my screen. I'm sitting up here talking to y'all like y'all can see my screen. I got this white chart, this white slide covering up the damn chart, so y'all couldn't see what I was trying to show y'all. But let me see where it's at. Let me fix the screen. Sorry. Pardon me. I think I can do it like this. Shareholder screen. Gone to liquidity suite picture. We'll do it like that. All right. So if you get in the trade, let's say you got in this trade, okay, with no stop loss, and if the price go down, you getting kicked out the trade. I'm sorry. If the price go down, it's taking your money. As far as it go down, the more it go down, the more money is taken until it take everything you got in the trade. Stop loss is just you saying, hey, get me out if I lose this much. And if it don't go down that far, I want to stay in the trade. Okay. And now you can say, it depends on your risk tolerance. You can say, I'm willing to lose 100. I'm willing to lose 300. I'm willing to lose 500. I'm willing to lose 50. I'm willing to lose 20. I'm only willing to lose 10. You can make that stop loss whatever you want it to make it. You can control how much you lose. A stop loss is an automatic exit order. It is an automatic exit order. You gonna place this before you buy. You gonna place this before your buy price. Okay, if I got in at $100, I want to make sure that my stop loss is at $98. If I think it's going up, my stop loss might be at $99, meaning that if the price come down to 99, give me back my money. Okay? The beautiful thing about using the stop loss is if the price is at $100 and I think it's going to go up to 105. Okay, but I want to protect myself, so I say, all right, let me put my stop loss at $99. So if it do go to 99, if it do go to if it drop down, it get me out. Let's say the price go up to $103. You could take that stop loss and move it up to 101. Now you making money if it kick you out the trade. Right? That's the beautiful thing about using one. Somebody says I'm big enough and moving my stop into profit. That's right, Hot. I ain't saying your whole name because it's diabolical. It's a diabolical ass name. Now, anyways, the stop loss. If the stock falls to that level, your trade is going to close to prevent you from taking a big loss. The problem, everyone places their stop loss at the same obvious ass level, which makes them a target. That's the problem. Do y'all understand what I'm telling you? Everybody putting their stop loss at the same spot. Don't y'all think that they're going to take that money right on up off the table? That money coming right off the table. Oh, yeah, y'all want to all put y'all stop loss there? Let's go there first, and then we're going to go up. That's pretty much what happens. You said everybody's setting their stop loss at that same level. Now, we're going to talk about liquidity now that is anybody still confused on what's a stop loss? Nobody should be confused on what's a stop loss after that explanation. But if you still are, tell me. I don't mind going back. Maybe you just walked in and you don't know. Is anybody still confused? Nobody's confused. Okay. Now we're going to talk about liquidity. Yeah, trailing stop is beautiful. That's what I was just talking about, Desto Westo. I told them how to do that manually though. Like I said, if you think the price going down and it's at 100 and you think it's going down to 90, so you put your stop loss at 101 in case it goes up, right? But then it actually goes down to 95. So now you want to take your stop loss and move it and make it to where you make money because you got in at 100 thinking it was going down to 90. It went down to 95. Move your stop loss to 97 so that if it do come back, you making money. You added that. Just make it make sense is all I'm saying, okay? Make it make sense. Now, liquidity. In trading, the best way I explain to people was what liquidity is. I like to use the lemonade stand example. Imagine you got a lemonade stand on a busy street. Okay, there's a lot of liquidity on that street, so it's going to be easy for you to sell. If you on a not so busy street, there's low liquidity and it won't be so easy to sell. In trading, liquidity equals clusters of buy or sell orders sitting in the market, right? Now, a stop loss creates liquidity. Stop losses create liquidity. Big players need to buy or sell huge amounts, right? So they need your stop loss orders to fill their positions. That's why they hunt them. Now we're going to talk about the swing low. This price bar, right? A candle that is lower than the candles on both sides of it, like the bottom of a valley, This is where most traders place their stop loss. It's the most obvious if the price goes below here, I'm wrong level. Okay. Now everybody, let's look at number one. Number one, the setup, the swing low. Okay, let's look at number one. This is the swing low. Every trap needs bait. All my fishermen know this. Everybody, you ever had to trap an animal or some shit like that, you know. You ever had to catch something, you know every trap gonna need bait. The swing low is the bait. They was baiting you. This is a price level where the market bounced previously. This is a low point that everyone can see on the chart. It's like a line drawn in the sand, right? Now, here's why this level is so powerful. It's obvious to everyone. Even if you're a beginner traders, experienced traders, algorithms, I was stuttering, algorithmic systems, let's put it that way. They all see the same swing low. And because they all see it, they all put their stop losses just below it. Unable to see chart. Okay, hold on. Yes, you can. NAZA. What do you mean? This white chart that I'm showing you is what I want to show you. Take your phone and turn it sideways, and you should be able to zoom in if that's what you're talking about. Okay, if you hey, everybody that sent the heart me, thank you, and thank y'all for the gifts and the go populars and stuff, right? I ain't see that. Thank y'all. Yeah, Nas, did that help you out? Everybody, you can turn your phone sideways and zoom in. Okay. All right. So, where was I? Where was I? Everybody can see this level. Everybody can see the same swing low. And because we all can see it, because of that, everybody put their stop loss right below it, right? So think of the swing low like the base of a fence, everyone hiding behind. Everyone agrees. If the enemy crosses that fence, we run. All right. Well, what if the enemy knows exactly where your fence is at? They not attacking randomly. They know where the fence is. They know the fence is there. And they coming straight for the fucking fence. I hope that wasn't a bad analogy. I don't know. I hit or miss with my analogies. So look, you got a higher low. On the chart, you see HL. Can everybody see HL? That's the higher low. Okay. In the chart, you see higher low that HL labels, and you see it at 3 points. Okay. A higher low means each bounce happened at a slightly higher price than the last time it bounced up. This is a sign of underlying demand. People are buying. But before demand wins, the market typically tests that zone one more time to grab the stops that's sitting there. These people got stop losses sitting there. This is a level of support. So again, before it takes off, the market usually want to test this shit one more time to hit anybody that got some stop losses sitting there. At this first stage, the price has made a bounce, okay? Traders who bought at the swing low, they feel confident. They got money. They made some money. They in profit. They stop losses are placed below the swing low. They feel safe. This is exactly the state the market wants them in. Somebody, Caden said, basically the zone where the price didn't break. You put the stop loss, but it's a bait because most people put stop losses on that zone. So you getting baited first round, right? Right. So let me help y'all out. When you become experienced, you start marking the swing lows, not to put a stop loss there, but you want to anticipate where the stop hunt is going to happen. Okay? You got to flip your mindset entirely. Where is everybody else going to place their stop losses? That's where I want to look for entries. I want to get in right there. Now, look at number 2. The pause, the gap. The quiet before the storm. Y'all see number 2, right? After the swing low forms, price doesn't immediately reverse. Imagine there's a gap in liquidity, okay? This is a zone where the price keeps moving higher, but eventually it needs to return to before so it can make a sustained move. This gap is the unfinished business zone, okay? All right, you got a rubber band you stretch between 2 fingers. You can pull it far in one direction, but eventually the tension builds. The gap after a swing low is that tension building. The price moves away from that low, but there's an invisible pull that you can't see. It's a gravity that wanted to come back down to test that zone one more time before it take off for real. Keep that type of shit in mind. During this phase, a lot of new traders, they see the price going up, and guess what? They feel relieved or even excited. They get real happy. They think that the bottom is in, that it ain't gonna go no lower than this. They might even add to what they already had. All right. Meanwhile, the stage is being set. Yeah, the shaded zone in the chart, that green area between the swing low and the price, is the target zone for the sweep. And now somebody else asked about fair value gap. I think it was, who was that asked about the fair value gap? Don. You still here, Don? You still here? We doing roll call. But look, okay, so a gap in the price, you see a gap, fair value gap. It's just a gap in the price action where the buyers and sellers have not fully balanced out. Markets are drawn back to these gaps like a magnet. You're going to see a gap in the chart, and pretty much the price is going to go back into that zone. You can mark any gap like a zone and expect the price to fall back into that zone. The zone between the swing low and where price has moved to is effectively a gap that needs to be filled. And the filling process is what creates the stop hunt as well. It is a trap alert. This is the most dangerous phase for y'all if you a beginner. Okay, you see the price recover from a very low point and it feels bullish, right? You see the price coming up from a low point and you think it's bullish. A lot of people take their stop loss completely off, thinking that the bottom is clearly in. This is exactly when you should be tightening the stop loss, not loosening it. Okay, the recovery coming ahead is fake. The recovery is a head fake. It's a fake out. Y'all do y'all research on fake outs. You thought it was a breakout, but it was a fake out. Do your research on bear traps and bull traps before you take another trade. Okay? Now, number 3. We got 3 consecutive higher lows, which creates the squeeze. Now, we finna get surgical like Denzel in Training Day with this shit, right? The chart showed 3 consecutive higher lows. We got a higher HL, HL, HL. Higher low, higher low, higher low. Each one approaching the swing low level. Okay, the third one comes super duper close to or slightly below the original swing low. This is the stop hunt. This is the stop hunt. 2 groups get destroyed here simultaneously. Right? So, the first people that get destroyed is the people who was long on that, who the longs. People who bought the bounce got stopped out. Okay, any trader who bought near the swing low, place they stops just below it. As price dips towards that level a second time, a third time, then touches it, they stop triggers automatically. They're forced. They are forced sold out of a position that was actually correct. Yeah, they get shaken out right at the bottom. It's brutal. Piss me off too sometime, Cadence. It happens. Now the people who shorted the breakdown, they get trapped. You got other traders who see price testing the swing low and kept thinking, this shit is going to break down. This is going to break below this level of support. I'm going to short it. They sell short, expecting a crash below the swing low. They get a brief confirmation as the price dips below, and then the floor drops out, and they fuck their whole thesis because the price finna violently reverse. And now they caught short in a ripping bull move, and they got to buy just to cover. So, that's going to fuel the reversal even more. So a mousetrap, this shit like a mousetrap. The swing low is the cheese. Both groups reach for it. The people who was bullish defending it, the people who was bearish betting on the breaks. The trap snaps on both on the same move in the same time. So the market just fed on everyone who put their faith in that level. And now, with everybody stops out the way, the road is open, wide open, to go exactly where it's supposed to go. If you don't even it take a lot of money to sit there and trade without a stop loss. That means you can afford any drawdown. You can afford the loss. You can take it. You don't care. You can take it. I just want you to know something. When you trade in stock options, you can't hold that shit, because the more time that goes by and it's not where you said it was going to be, you just fucked your whole contract up. I don't care if you said it was going to go to 130 and you got in at 100 If that shit dropped down to 40 first, it just fucked up your whole P&L. You're not gonna make what you was gonna make if it went in that direction because of time decay. Understand theta. Understand time decay. All right, now order flow entry. This is another professional insight. The Look at this green note that says this is where you want to look. Is it green? Yeah. Y'all see the little green note bottom right? Excuse me. This is where you want to look to long. Long means I press buy or I'm bullish. Short means I press sell or I'm bearish. Okay. This is where you want to look to long via order flow. What this means is after the third higher low, okay, after the third time it dropped, but it don't drop as low as it did before, the higher low. After that third HL test the zone and you see the price holding, not breaking down, you watch the order tape, which is the live stream of actual buy or sell orders, okay? You watch that for signs that big buyers are absorbing the selling. When you see large buy orders stacking up, I know some of y'all see that order book and don't know how the fuck to use it. But when you see large buy orders stacking up, right, even while the price dips, that's institutional accumulation, and that is your entry signal. Trade says, damn, thanks, G. No doubt. That's your entry signal. So now we're going to, how many people seen the movie called The Big Short? Or y'all saw the movie called Dumb Money where they had that squeeze situation where GameStop was in that squeeze. So you got an opportunity to see what happens when a stock is either is in a short squeeze or in a long squeeze. Repeat what, Juju? Order flow entry. Look at the bottom right where it say this is where you want to look to long via order flow. So after the third higher low, test that zone and you see the price holding it and it's not breaking down, go watch the live stream. It's going to be a live stream of actual buy sell orders. Every platform usually got them. All right, watch the order tape for signs that big buyers are pretty much taking on that selling. They absorbing the selling. When you see large buy orders piling up, even when the price is dipping, that's institutional accumulation. That means the big money is buying. The whales is stepping in. Okay, so the short squeeze. When traders who shorted, though anybody who shorted something, that means they bet on the price going down. Anybody who shorted, they betted on the price going down, right? In a short squeeze, those people who did that, who betted on the price going down, they are forced to buy in order for them to close their losing position as the price moves against them. This buying pressure adds fuel to the upward move, creating a reinforcing rally. The stop hunt literally creates the fuel for the reversal. Do you understand? Trade Izzy said, this is fire. It's like all these people don't know what they doing. Makes sense. Yeah, Trade Izzy. In the market, you got a shit ton of people that don't know what they doing. And they become liquidity in the market. And you make money. Hey, that money go to you if you patience. The market rewards patience and discipline. Now, number 4, the complete reversal. The complete reversal. The market launches with all them stop losses out the way, right? And all them shorts trapped. Everybody who thought this shit was going down or whatever the case may be, and now they got to buy for it to go up. All them stop losses hit. The market just did its job. The weak hands, or they call them paper hands, all them people, the traders who was in fragile positions, they got to pay their rent with that money. They got to pay their mortgage with that money. Whatever the fuck the case may be, they got shaken out. They have been removed. What's left? Only committed buyers and panicking shorts who are now forced to buy. the result isn't explosive. Usually near it's like an elevator. Yeah, it's like an elevator. Why I say that? Because it goes straight up. It don't take the stairs up. It take the elevator up. Yeah, it's usually a near vertical move up. So this is the complete reversal. Notice what it does on the chart, ladies and gentlemen. It wipes out most of the prior downtrend in just a few candles. The same people who got stopped out at the bottom, they now watch in fucking disbelief as the stock rockets past where they were stopped out. Mad as hell they are because the price went exactly where they predicted it was going to go. And they got stopped out before they got a chance to. So, yeah, imagine a crowded elevator. Everybody shuffles and pushes to fit in and shit. It's uncomfortable as hell. Then half the people get off. Okay? That's the people being forced out by their stop losses. And now it's enough room. The elevator shoot up with less weight, far less friction. The congestion is the thing that was holding it down. Once it's gone, price has nothing in its way. Okay? All you weekend people, I'm here to help you. If you are a weekend, you got weekends, that just means you are one of them traders that's in a position that you can't emotionally or financially hold through volatility, of course. You own a stock and it's just moving too much, and it's like, damn, you looking at it and it's like, I'm down way too much and I need this money by next week. I need it. So they either panic sell or they get stopped out at the worst moment possible. Yeah, Izzy. I know, man. It's you know, I don't know. I do my best to talk about the shit that matter, but sometimes I don't. I get a little off topic. How can you put info together? What you mean, trade? What you mean, Izzy? Yeah, so people, they end up panic selling. So the institutions, they need weak hands. They need people to have weak hands in the market so that they can exit. They want to get out before the price can move freely. So the stop hunt is the mechanism that forces the weak hands out. Like all this info. This will be on YouTube. I always post my replays on my YouTube channel. Subscribe to me on YouTube, Ironworth Trading, and you can go watch some of my previous live streams. If you enjoying this, then I'm pretty sure you will like all my other ones too. They are information packed. I'm gonna overwhelm you with information, right? You might hear me cuss a few people out and shit. You might hear lighter flick and shit all throughout the live stream, but you gonna learn. You gonna learn for sure. Now we're gonna talk about all my strong hands people, all my diamond hands is what they call. The people with the diamond hands, traders and institutions who plan for the stop hunt. We planned for the stop hunt. We know the liquidity sweep. We placed our entries in the sweep zone, held through the volatility, right? And we was buying while everybody else was panic selling. So now we sitting on an entire new rally. We sitting on the entire rally. Okay, so the key risk management rule for y'all, if you trying to trade this setup, your stop goes below the sweep low, not above the swing low. Okay, you entering after the sweep. I'm getting in the trade after the sweep is over with. If the price continues lower past your entry zone, the thesis is wrong and you exit with a small loss, ladies and gentlemen, because it should either be a big win, a small win, a break even, or a small loss. But if you right, your reward is on the entire reversal move, and that's that 3-to-1 risk to reward ratio, or that 5-to-1 risk to reward ratio that I'll be telling y'all about, where you basically only risking a little bit to make a lot, all right? To make more than half of what you're risking. The biggest mistake that y'all could make is chasing the move after step number 4 has already happened. Once you see them big ass green candles, you are late. You late, ladies and gentlemen. You moving off CPT. You can't bring that color people time to the market and shit. CPT all the time. I probably shouldn't have said that, but whatever. I'm serious though. So the setup was in step number 3. Trade Izzy, it's just a joke. It just means don't be late. It means don't be late. Yeah, so chasing the move after step 4 has already happened is a big mistake. You don't want to do that. You late. The setup was in step number 3. Okay, in the sweep zone, buying after the reversal is confirmed means you now own what the strong hands are potentially getting rid of or distributing. I'll say that for lack of a better word. So once you learn the pattern, you'll be all right. You can then act before the launch and not after the launch. Can anybody tell me why does the market hunt stop losses below the swing low? I'm gonna give y'all 4 answers, and y'all multiple choice questions, and I want y'all to tell me the answer. Y'all just sat up here and learned this shit. Why does the market quote unquote hunt stop losses below the swing low? Is it A, because the market is random and has no memory? Is it B, because big players need the sell orders from triggered stop losses to fill their large buy positions? Is it C, the market goes down because there are no buyers left? Or D, it's just bad luck for traders with tight stops? That's right. B is the answer. B is the answer, correct. Big institutional players need massive amounts of liquidity to enter positions. Your stop loss order and everyone else's sitting just below that swing low is the perfect pool of sell orders that they need to buy into. They push the price down, that trigger the stops, and then it fill they buy orders. And in reverse, you was the exit liquidity. Okay? Now, in step 3, two groups of traders get hurt at the same time. Who are they? Is it the long and shorts? Is it the day traders and the swing traders? Is it beginners and professionals? Or is it option traders and futures traders? It's the longs and the shorts. The people who were long and the people who were short. The people who was bullish and the people who was bearish. Longs who bought the original swing low get stopped out as the price dips below their stop level. And the people who were short, who bet on the breakdown, get trapped when the price shoot back up. Both of their ass got smoked. And the market used their pain as rocket fuel. No trade, it's the longs and the shorts. So my last question: where is the ideal entry point for this pattern? And where should your stop loss go? Is it A, before? I'm sorry, is it A, you buy after the big green candles confirm the reversal and you put your stop loss above the swing high? Is it B, buy at the original swing low, just stop below it? Or is it C, buy in the sweep zone during step 3, stop below the sweep low? Or is it D, wait until after the full rally, then buy the pullback? Again, I'm gonna ask the question again. Yes, A1. Yes, Isaiah. Y'all got it right. Where's the ideal entry point for this pattern? And where should your stop loss go? They said C, buy in the sweep zone during step 3. Stop below the sweep low. You got it. The edge is in the sweep zone. When the price dips into the stop hunt area and you see signs of holding, I'm talking about order flow, absorption. Sorry. That's basically where you see the stops being absorbed. Okay. Reversal candles, your stop goes below the sweep, so you're not a part of the next wave of stops. You want to be below that area, and then you really want to get in after the shit after that zone. So buying after the big green candles means the big move has already happened without you. You don't want to wait. You see that, you too late. So do what y'all got to do. Step 1, market makes a visible low. Traders place stop loss below it. Liquidity pulls up like water behind a dam. Number 2, the gap builds. The price moves up, creating a gap or an imbalance. The tension builds. Traders feel safe, even though they fucking shouldn't. Step 3, the sweep happens. You get 3 higher lows. that test the zone. The third one dips into the zone, triggering stops, shorts pile in, both sides get trapped, and then step for the launch. Weak hands gone, the shorts is squeezed, nothing in the way. The price take the elevator up, it's gonna reverse. It usually rips, and it's usually violent. Now, this is just one pattern out of dozens that y'all need to know in order to read a chart like a professional. If you serious about learning this and not just watching it, but actually trading with confidence and a real strategy, mentorship changes everything. Hit the link in the bio. Yes, I am. Trade Izzy Zone Folk, Cascade, Beecher Road. Yes, I am. But anyways, hit the follower button. Inbox me if y'all need help. Enjoy the rest of this week. It's Wednesday, March 18th. We're going to make today twice as good as yesterday, half as good as tomorrow. Nah, A1. No. This is from this screen that you see, this picture that you see on the screen. I got my composition book here that I take notes in, and I teach from. It got my curriculum in it. So I got a curriculum for the rest of this month for y'all. For every time, each live stream going to be about something different. When I get to the end of the curriculum, I reset it. I used to only do beginner classes, ground zero, but I got tired of teaching how to read a candlestick chart. That shit is tedious and annoying sometimes. I like to have fun, and it's like it's like babysitting. But it's okay though. I have nothing against it. I done it 1,000 times. I used to do that was all my show consists of back in the day. How to read a candlestick chart. So this is like middle school compared to what I used to teach last year. You come in here, it was straight beginner. Y'all, I wouldn't be talking about no liquidity sweep at all on live stream. This is actually the first day I went this deep on something this advanced. But it was easy to understand. What y'all think? I think that shit was easy to understand for y'all, right? A lot of people got it. A lot of people got it. I'm proud of y'all. Congratulations, too. If you don't got it, it's my fault. It ain't your fault you don't understand. I need to teach you on a 1v1 level. You need to inbox me so I can like teach you on your level. Everybody don't fucking learn the same. So I don't expect you to learn the same way 4 people in here got it. It's 50 people in the live right now and only 4 people got it. No, I want to see 50 people inbox me then so we can get to the bottom of this. Juju said more of this. Anything, Juju. Always. This is the necessary info for sure. So yeah, I'll be back again tomorrow, y'all. We remember I remind y'all every night. Tomorrow when y'all trade, let's keep them losses small. I don't want to see no crazy ass stop losses. Let's keep them losses small and let's pay attention to where we place them. Matter of fact, just try to get in wherever the fuck you was gonna put your stop loss at. Make that your entry. I think tomorrow's lesson gonna be on limit orders. Tomorrow's lesson, let me write this down. We're gonna talk about order types tomorrow. We're gonna talk about order types. I think y'all don't know how to use order types correctly. So y'all come here tomorrow night around 11 p.m. Eastern Standard Time. If y'all don't see me here, it probably be about 12 o'clock. I will be late. So just hit the notification bell so you can get notified when I come on. You feel me? That's crazy for somebody to tell you they're going to be late ahead of time. Ain't that crazy? No, I'm just saying that because I'm free. Okay? I'm free. But I will be here around between 11 and 12. It'll be at nighttime for sure. I'll catch y'all later. Again, if y'all need help, if you didn't understand the live, inbox me and we'll get to the bottom of it. If you want to rewatch the live stream, it will be posted on my YouTube channel. Welcome. Ironwork Trading. The link is in the bio. You're welcome, Ken Bates. Everybody, y'all welcome. Please feel free to inbox me if y'all want to continue y'all learning. What's the NIM? What you talking about, Javier?